February 2022, 2023. This is the S&P 500 E-mini Futures 2000 tick chart on the Thinkorswim platform. You don't have to listen to this whole or listen or watch this whole video. Just go down to the description. You can look at the timestamps of all the trades I took, as well as some interesting trades that I either didn't take or just interesting things that I saw. So today, this is what the chart looked like. It was very, very choppy. It looked like there was a lot of, kind of stayed within this giant trading range. This is what my chart looked like. I only took one trade today. I also wasn't able to trade after 10 a.m. Pacific Standard, just because I had to run out and do stuff. But I came back and looked for other trades just to improve my chart reading. And it looked like there wasn't that many good, clean setups today. There were probably just a handful, very few. And overall, the market was just kind of chopping around. The only catalyst today was the release of the FOMC meeting minutes from last month. And it happened around 11 o'clock a.m. Pacific Standard. And right around this area, you see where it's got kind of choppy. Now, even though there wasn't that many entries, if you did catch a couple of them, they ran pretty well. But overall, it was a pretty choppy day. It kind of stayed within this giant trading range that I drew. I could have extended it out further, and I did at one point, thinking about it after I came back and looked at things. But I think overall, this is pretty much the dominant trading range. You can see where the open and close were, because this is the close from yesterday where my cursor is, kind of fit the midline of my trading range. And then this is where the open was. So I'm going to dive right into it. This is the pre-market. Pre-market, I already established this trading range here. This is kind of the double top high. It did go a little bit higher, but I treated it as a overshoot, and then I just drew the bottom. I had it up here, considered having it up here at one point, but I ended up just dragging it down. So even though I don't trade the pre-market, I did see a second entry short right here. It was a pretty clean one because it touched the bottom of the range, came up, first entry short, second entry short. Unfortunately, I don't trade the pre-market. This is at 4 a.m. Pacific Standard. I'm asleep. And I also saw a lower high here, but that's neither here nor there because, well, I'm not there, so shouldn't worry about it. So price opened, it started chopping sideways. And this is a trading range that I established. First, I had this resistance line down here when I only saw this much of the chart. And I actually had this a little bit lower, kind of down here, but then later I dragged it up. But I had to kind of treat it as a smaller trading range at the beginning. And as prices kept moving, this is where I saw a potential new high, first entry long, second entry long. I didn't take the second entry long, even though it was bouncing off this bottom support line, because I just saw that the EMA is right up above. And if it really is a trading range, it might just break through, but it was just a trade I skipped. Turns out it would have worked. Then I also drew this trend channel going up just to kind of give me a little bit of a guideline. Now, when it came up to here, that's when I dragged from, I originally had my top of my trading range down here, and I was pretty happy. I was also touching the top of this larger trading range, which kind of helps confirm that this larger trading range might be in play. It's respecting it. Now it breaks above. So as soon as it broke above this one, that's where I dragged the trading range top from this guy from down here, dragged it up to here just to see maybe there's a overlapping trading range, you know, a small trading range on top of this bigger one right here. And as throughout the day and in a lot of my charts, I have a lot of overlapping trading ranges, which is okay because, you know, the small ones might be in play while the big ones are the big dominant global trading ranges. So just sat here, kept watching prices move. It's starting to drift down, so I draw this trend channel cutting through the tops and the bottoms just to give me a little bit of guideline. Now, this is not that great a trend channel just because the slope is not very steep, but it's showing that it's kind of respecting it, except for right here, it starts to break out. And it goes into another trading range and it breaks down further. I don't see any very good, I mean, you can say there's second entries all over the place, but they're not high probability, so I left them alone. Prices come down and they touch the bottom of this trading range, which is good because it helps confirm this bottom guy. Because originally I had it up here thinking, okay, it might be down here. So when it touched here and bounced right back up, that's when I dragged it from where my cursor is, the horizontal gray line, all the way down to here. And then it breaks down even further, but right now I'm not going to drag it down further because I like these two touches. I'm thinking it might just be a failed breakout. And it turns out to be a failed breakout. It goes right back into the trading range. And here I see a potential second entry long because I saw this big move down. Saw this as first entry, new high, first entry long. And here it might be setting up for second entry long as well as a failed breakout. I don't have this marked at the time. In real time, I'm just watching this. I'm keeping this in my mind. So I don't have any super psychic skills to write down that this is a second entry long, a failed breakout so early. I have it in mind and I'm watching if it's going to break above. And so it does turn out breaking above, and then I come back and label this. So anyways, this is a pretty decent setup just because there's enough room for the prices to move back to the EMA before potential bounce back down. It's also at the low. Now, you could say I'm probably picking the low here, but that's okay because you want to buy at the lows and sell at the highs. So I am technically buying at the lows if I took this trade because it is this trading range and it's moving back in. So if I were to enter this, I would have probably placed my entry right here, one tick above the close of this guy. Actually, one tick above the high of this guy. So it turns out to be a pretty decent trade. Now, this is where I do take my first and only trade, actually. So when this came down, made a new low, first entry short, but it's also second entry long. But then it makes a second entry short. But during this candle, when it came down and broke below, that's when your second entry short is official. But when it goes back above, now it's a failed second entry short. On top of that, it is a lower high. So, excuse me, a higher low. Let me relabel that. So even though it's a higher low, I thought, okay, this might be worth a trade. Prices look like they're coming back up. So that's where I actually put my entry. I put it at one tick above this guy. Next candle fills me. The candle after that gets my core profit. Now I have a runner, and I'm chasing the runner one tick below the stop of these guys. And I was able to get a pretty decent runner out of it. And this is right here, my runner. When this one finished forming right here, that's where I put my exit. And then this candle stops me out. I also have a trend channel drawn to go up, thinking, okay, it's going to break out and probably will test a new high. But as you can see, this dashed line is actually where the close of was yesterday's close. And also it happens to be the midline of this bigger trading range. So it bounced right off of down. So you can treat it as like almost two trading ranges, an upper one and a lower one. And right now it's just kind of dancing around the lower one. Goes back down. Also notice that it made two measured moves, like from here all the way down to here. So when this formed down here and I drew this measured move, I figured there's this potential support here. And it does actually become a support. And even though it goes a little bit further than the measured move, it goes right back up. So that gave me more confidence to take this particular trade. I also like that when this candle, so this is my second entry long here, but then when this candle closed, it was right below the EMA, but this is a very strong candle. So I didn't enter on this one, but I entered on this one. After this guy closed, I was pretty confident this is a pretty strong candle. That's where I took my entry. So it's just more basis of giving more confidence that this trade was going to be relatively decent. It's not 100% guaranteed, but it was something to consider taking, and I did. Prices continue moving. Now, right here, there's not much of a setup because it's getting very congested because they're all side by side. Look at the size of these candles moving up and down. They're almost like whatever they provide, they take it all back. So that's just a signal to me to kind of sit on my hands. Things are certainly very choppy. And here I do see a failed second entry short. So if you take this as a new low, it's be first entry short, second entry short. As soon as it breaks down below, it becomes a true second entry short on this doji. But then on this candle, when it breaks up above, now this second entry short fails. Notice that this guy broke above this guy and it engulfs the top of this guy. So I didn't take this trade just because I wasn't really quite prepared. But this one was a possible entry, even though it's like a doji here. So if I were to take this trade, I would have tried to set it back here, hoping the next candle will come back for me, because taking it one tick above is a little bit risky. Turns out it would have worked if you're just going for a quick scalp, but then it would have come back down. And if I had my entry in the middle of this candle, one tick above this guy, I never would have gotten filled. So it kind of would have been a non-issue anyways. But if you look at here, there's a first entry short, second entry short, it fails. Right here is a potential lower high. I saw that, but I wasn't ready to take it. It ends up being a decent trade, but you would have had to kind of keep your calm through this chop of just 2 points. And then it would have kind of gradually grind its way up. I mean, it was kind of a slow day, but the trades were there. There weren't very many, though. Then prices continue moving up. I don't see anything I really like. The price action isn't the cleanest. I also draw this measured move because once it made this intermediate high, came down, I said, okay, there might be a measured move, and it actually does kind of get to the top of this measured move. I also saw one big potential leg. That's how come I drew this guy. So inside this big leg, there's these two smaller legs. Prices continue chopping around, makes a trading range, and it breaks down below. Comes around. So when it reaches this new low, that's where I kind of copied and said this is the potential measured move. It might come back up to here. Just a little bit of guidelines for myself. Now this is just a lot of congestion, a lot of chop. I don't want to have to participate in any of that if I don't have to. Chops around. It's in this pretty clean trading range. Unfortunately, there's not really any clean second entries. I mean, you could say there's a new high, first entry long, second entry long, and then what would you do? Would you actually try to take it here, and then would it be a failure, and you try to take it down here? It's just a whole lot of noise right now that I don't want to try taking a risk on. Prices continue moving up and down. It breaks out, and I, at this point, draw this trend channel because when I saw this bunch of touches here at this time of day, I said, okay, there's probably something here. So I draw this, and originally I had this guy a little bit lower because I started the trend channel right here. But later I kind of drew it up to the top as more prices came about. But I don't know it at the time, and I'm constantly adjusting my trading ranges and trend channels. So now it confirms up here, which is pretty nice. It confirms up here, but it breaks through. It also breaks through this trading range. So I see it as an overshoot, but not something I want to take a trade on because right now the trend looks pretty bullish. Keeps going up, and then now it finally breaks down. I mean, you could say there's second entries in there, but I just don't want to deal with that. Prices continue moving up. And I do see a visual second entry short here, meaning from here, technically there's a first entry short right here. Let me zoom in for see it better. So technically there's a first entry short, and then there's a second entry short. Then you could technically restart the count, be a first entry short, second entry short. But then I wouldn't necessarily restart the count again. But if you look at it as a big visual, it'd be one leg up, pull back, second leg up. So then I counted this as maybe one first entry short, then two second entry short. Now, I wasn't ready to take this trade just because I stopped trading at 10 o'clock. I had to leave my desk. But had I seen this, I'm not sure I would have necessarily taken the trade. This is a pretty nice candle because it's only about 1.4 ticks. So taking a risk wouldn't been that bad because you have enough room to the EMA. But I probably would have just as well let it go as well. But it turns out it would have worked. And then now I see a lower high here, but I thought it was pretty aggressive because the EMA has, since this time here, this one gave you a lot of room to the EMA. This one's a lot less room. So when you see this doji form and you're wondering, okay, maybe there's a lower high here, and it proves to be a high that's lower than this guy, and then the next candle flashes down. If you didn't take it here, if you took it here, that'd be really risky in my opinion because the EMA is right here now. You don't know if it's going to bounce off the EMA and continue upwards or it's going to break through. So it's something I saw after the fact, but I certainly don't know if I would have taken that trade. Looked like it would have worked. And then this is right where the FOMC meeting minutes from last month were released. And it's kind of surprising that it's this choppy because the meeting minutes, I mean, people read into it, I'd probably overread into it, but it's kind of nothing out of the blue that we already knew from Jerome Powell's press conference after the meeting minutes and interest rates were declared last month. So nevertheless, just be careful around these times of day. So I wasn't here to trade, but if I were, I'm pretty sure I wouldn't have taken a trade during that time. I don't want to get chopped up. Prices continue moving. It's pretty choppy. And then it's kind of coming back into the larger trading range, which is this guy. So again, I'm not taking any trades yet, just because I don't see anything. I'm talking hypothetically because I wasn't here. Prices keep going up. Now I see a second entry short here. Now a second entry short here is a new low. You have a second entry short. It's kind of like a hidden second entry short one here, and then it kind of moves up. Technically, you have another second entry short right around here. So it's kind of like a visual second entry short, one leg up, two legs up. And it would have been like a first entry short, second entry short, it's hidden. There's a lot of things saying, it's not as clear. So I think I would have skipped this just because, I'm saying, oh, there's hidden one here, it's not as clean, and hidden one here. So if all those factors weighing in, I definitely wouldn't have taken the trade. But I just like to know and point out this to myself. So maybe in the future, if I'm more experienced or see it enough times, I will know what's going on. So at this point, I do draw this trend trend channel going down. And at that time, I wasn't sure where this line went. I kind of had it up here thinking, and maybe down here, but I ended up settling for right here. Now, when I say I'm seeing at the time, it's because when I go back and look at my charts, I try to replay it in real time, going tick by tick, and not look at the full picture at the end, because I want to try to simulate what I would think I would do in real time. Kind of like what I'm doing here. So prices continue moving down. It comes up, and I do see a second entry short and a failed second entry long. So this is how I saw this. I saw this as a new high. Goes all the way down. You have a first entry long right here. And then it comes back, makes a second entry long. Doesn't break above the EMA though. So when this second entry long forms, you don't know if it's going to keep moving up, but on this candle, you see a flash down. So this is where the second entry long fails, but you also now have a new low, first entry short, second entry short. Now, this is actually a pretty decent trade. However, I would have preferred if this candle wasn't this big, if it kind of cut and ended closer to the middle of this big candle, just because for me to see this, I would have either have taken this when it engulfs this one flashing down, but that's risky because you don't know what's really going to happen, or you'd have to take it one tick below here. Taking one tick below here, it's already kind of testing this new low. Granted, the EMA is holding, but taking one tick below this, I think was just a pretty big risk. So if I'd seen this in real time, I don't know. Well, I'm pretty sure I probably would have left it alone. Unless this candle was actually smaller, then it gives me more confidence there's more room to run. Then prices continue moving down. At this point, when I see this kind of touch here, I think that's when I would have dragged this down to here. Prices continue chopping around. There's no real clean entries, testing the bottom of this trading range. Now, this trading range has only been tested a couple of times. Once here, broke through, and once here, broke here, consolidated, depleted all the sellers, and the buyers came in. So here, I have no idea if it's going to continue going down. It's also getting toward the last hour of the day. So certainly I would have left it alone. I do see a second entry short here. So it's new low here, first entry short, second entry short. Now, this is a pretty decently small candle. It's a possible trade. There's enough room to the EMA. But you could have also counted in a different context. You could have counted this as one new low grouped together, and it'd be a first entry short. But in this case, I probably would have counted separately as a first entry short, second entry short, because there's enough room, and it would have worked out because it is getting close to the top of this. However, it closed, not however, but the close of this candle closed toward the bottom, so it would have given me a little more confidence to take this trade. Prices continue chopping around. So when it came down to here, I thought, okay, this bottom, this trading range, trading channel is probably pretty valid. Comes down, chops around, keeps moving. There's no real clean entries here. It's in a choppy trading range now. So it's not something I want to try to take an attempt at or stab at. Because you want to buy at the low and sell at the high, but there's no real, I mean, you could have probably taken this one as a second entry short. If you count this new low, first entry short, second entry short. But the close and the open is right in the middle. If this had actually closed a little bit lower, it might have been worthwhile, but then you're getting close to the EMA. However, the EMA is flattening out, so you don't worry too much about the EMA. You worry more about if you have enough room to get to the bottom of the trading range. But if this candle didn't signal and didn't set up quite that nicely, nor did this one. So in real time, I'm pretty sure I wouldn't have taken that trade. I do see a second entry short. So if you take this as a new low, you have a first entry short, one tick below. It's above this trading range now, and you have a potential fail breakout. So it's a fail breakout, and on top of that, it's also touching this trend channel coming down. So you have three confirmations now. Technically, you'd have a fourth one if you actually drag this one a little bit lower. I just had it right here. But the way I have it is kind of here to touch, I guess, a fourth time. And this is a pretty decent candle. However, it is touching the bottom of this trading range of the big one. So it's kind of a roll of the dice. So I'm not sure if necessarily I would have taken this because it's a decent signal bar, but you're kind of debating whether it's going to bounce off of this guy up or it's going to bounce off of this guy back down and back into the smaller trading range. So there's like opposing ideas going on. Makes it less than high probability because you have to resolve these two conflicting ideas. So I don't know if I would have taken it in real time if I were around. And then prices continue moving down. I do see a failed second entry short. I think it's new short here, new low here, first entry short, second entry short, and it fails as it bounces back up. But this is like this is at 12:56, and it's going to market regular hours is going to close in about 4 minutes. And I definitely don't want to try to scalp out any extra profits at that late in the day. And then it kind of kept moving up, so it would have worked. But if this had set up earlier in the day in the same context, it might have been worth a trade, but not when it's only 5 minutes left in the regular trading hours. So that's how I saw the trades today. Hopefully that was helpful.